A few weeks ago, an AI trading bot tutorial taught 1 million people to build the exact system I run. Same model, same broker, same wiring. After 460 honest no's last episode, I finally opened that folder. I took the strategy inside it, dropped it into my own honest backtest, and asked one question. Is there an edge in here? Here is the answer the test gave me. Welcome back to Edge Lab, same pact as always. Honest quant, real logs, nothing to sell. Last episode, I ran the biggest search this system has ever attempted. 460 ideas in one night, almost all of them refused, and one number that looked like a win and turned out to be a market-wide rally wearing a disguise. After that many honest no's in my own lab, the temptation is obvious. Look outside. See if the crowd already found what I couldn't. Here is the setup. A creator with over 1 million subscribers published a full build. Connect the model to the broker, scan the market before the open, place trades, send alerts, all of it hands-free. It is a clean build. I will say that plainly. The plumbing is good. It is, honestly, the same architecture I have been running for months. And the strategy inside it has a name and a shape. Long only. Buy a stock that gapped up at least 3%, that is trading above yesterday's high, above its longer-term trend, and that is making a fresh high on the day on real volume. Join strength, do not fight it. 6 filters. A real, specific idea. So I rebuilt it exactly. Same 6 rules. Same exit ladder the tutorial spelled out. Take 1/3 off at 3/4 of your risk, move your stop to break even, trail the rest behind the swings. Then I ran it the honest way. 80 of the most gap-prone large stocks. 60 days of 5-minute data. Entry only at the close of a bar, never peeking at what happens next. And I did not run it once. I ran 4 versions. Its exact thresholds, plus 3 looser ones. Because if there is an edge hiding in the idea, loosening the net should still leave a trace of it. A real edge does not vanish the second you stop cherry-picking. Here is what came back. The exact strategy, run by its own rules. 32 trades, and an expectancy of basically 0. 1/100th of 1 R. A coin flip that forgot to pay. The best of the looser versions did better. A little over 1/10 of an R per trade. But it still fell short of my bar, and my bar is not high. It wants at least 2/10 of an R before a strategy is allowed to touch even paper money. Not one of the 4 versions cleared it. And remember, that is the flattering picture. I have not even charged it commissions or slippage yet. Add the real cost of getting in and out, and the thin ones cross straight into the red. Then, while the data was already loaded, I tested 3 more strategies the same crowd sells. A trend-following indicator. A squeeze breakout. A moving average pullback. Thousands of trades between them this time, so nobody can say the sample was too small. The best of the 3 landed around 6/100ths of an R. One of them was essentially flat. Everyone failed the same gate. So here is the lesson, and it is not a cynical one. A strategy shipped to 1 million people is not an edge. It is a crowd. The moment a setup is clean enough to teach in 20 minutes, on the most liquid stocks in the world, it has already been worn flat by everyone watching the same chart you are. The honest sieve does not care how viral the source is. It said 0. Again. So that is the test. The bottom million people were taught, rebuilt honestly, and there is no edge in the strategy it teaches. The build is real. The edge is not. And that is worth knowing, because it tells me to stop looking where everyone else is already standing. It cost me nothing to find out, by the way. The whole check now runs in about 90 seconds. So the next viral strategy gets the same honest sieve, just as fast. Next time. If the public playbooks are picked clean, the only place left to look is data the crowd does not have. I am going there. Until then, watch the logs, not the gurus. For educational purposes only. Not financial advice.